in their guidelines. So because it fits into pension guidelines, because it's securitized, because it can be publicly traded, it already fits into feeling safe for a lot of people and therefore vetted. So for those who are looking at, I've raised money to try and exit. I think in the earlier panel, and I'll piggyback off that, one of the things they were pointing at was, look, if somebody's doing an energy infrastructure, they've got to do 10 to 18 years of financing. Early exiting through a REIT can help you recoup some of that capital back earlier than that, and it shortens your investment time horizon, and it also shortens your risk by then allowing yourself to pool. So remember that, and I always want to remind everyone this, remember that the other feature of capital markets is that it's for resource mobilization. It's capital mobilization. So we're talking about you don't have to look for one investor to take your solar farm off your hands or your portfolio of solar farms off your hands. You can find pension funds who are fine with it. You find individual investors, institutional investors. Everyone can now start saying, we'd like to participate this because this is part of a property portfolio. It allows all the way down to an individual to now say, I'd like to play in the energy space now, because now you're taking that kind of portfolio to the market. So our goal, and it's very ambitious, is to make sure that we want to make sure there's one of these on the market by the end of the year, so that it's not a piece of paper, it's a concept, but it's an actual asset that people can say, now I can buy into it. The other concept you're talking about was the housing crisis. We're having a housing crisis, especially affordable housing. And what you do need again is, how do you take portfolios of housing, and instead of people having to manage them individually, bundling them, putting them under a management company, and securitizing them for people to be able to buy pieces of them and to therefore invest in pieces of them. And that has already been done. For an example, it's not housing, but look at Real Estate Investment Zambia. That is securitization of property. And you can do that with flats. You can do that with affordable housing. For example, and I know this is an American example, but because the law is allowing for it, we don't realize in our country that the law already allows for this. Exactly what Blackstone does. Blackstone is the biggest landlord in America now with 274,000 lots of property. And they've got that in their Blackstone property REIT. We can start to do that to allow capital to come together as well. We can also talk about securitization of certain commodities. We have a gold sector that we're trying to develop as a country. Securitization of gold that we're developing in this country, or therefore we can actually start to get processed, is another method. So these are the first three. I would look at housing and I would look at energy, because those are good job booms. They're transformative. They hit right at home with people, finding affordable housing for people, but at the same time, having energy that we can reach that 1,000 megawatt goal for solar. It allows for people to say, oh, so that means if I can build solar farms in Zambia, I don't have to think about being here for 20 years. I can be here for 5 years, bundle my farms together, and start to work on my exit strategy so that I'm not stuck in here in case anything happens, but I know that. And that incentivizes a lot more capital to come into the country, especially for things like that.
Okay, interesting to know. So I'll throw one more question at my panel here, and then bounce it back to the audience. Maybe we can get one or two questions, then we could wrap up our session. So assuming I have 64 houses lying around somewhere, and a partner of mine has a couple of houses as well, and we want to come together and securitize these houses, probably list them on an exchange like REIT Zambia did. What's the process like? Where do I start from? Who do I send a text message maybe the next day, or this will be done? Mr. Chitalo, could you just give a little insight? Then Mr. Kabaso, you step in.
A lot of good questions, like I've said. I think what we lack in the country is awareness. And there are certain sectors of society that are probably more aware than others. And I'll leave it at that. The first project that I worked on when I just joined the SEC was arcades. I think you have also seen how arcades has transformed in the last 10 years. Even how it was constructed. That was the first listed, not listed, but registered unit that raised money from the public and they constructed. There were about 14 original shareholders who later on sold it to Farmers House. And maybe I can say the rest is history. I think what we miss in this country is working together, not just politics, but economics. We want to die with our ideas because if I bring on a Philip Chitalu, then I only have 50%. So I want to have 100% of one house instead of 10% of the 264,000 housing units. I think that's far larger than 100% of one house. I'll also give you an example, I think, of something we were chatting on as we were walking back here. If you get to see the wealthiest person in the world, Elon Musk, he only owns about 13% of Tesla. 13%. And yet, that 13% is worth something like 194 billion. 13%. But here we want to have 100% of $100,000, not 10% of $1 billion. Look at the way CEC and other listed businesses, which my colleagues have spoken about, are transforming. Now CEC is $1 billion company, probably even $1.2 billion now that the exchange rate is on our side. So can you imagine if you own 10% of CEC, that means you are at least at $120 million. So this is the power of working together. It brings and solves a lot of issues that have been discussed by the panel. Capital formation, in the sense that a lot of us come together and build something big. Governance, like she was talking about, you don't just now wake up one morning whilst having breakfast with your spouse and you say, we are buying cars. And maybe the buying of those cars affects your working capital. But because of governance, where you can't just walk into a shop and get the money, that probably saves the business and brings in the lot of trust that the pension funds need. What is true is there's a lot of capital, but that capital can only go to well-managed firms. And we've seen this. In the last less than 18 months, CEC has been able to raise $150 million using an innovative product, the green bonds. They raised 56 and they raised another 96. I'm told they should be bringing up another 134 megawatts maybe by December from the $96 million. So these are some of the things that we need. Now, how do we get to do this? I think we've covered a lot of issues. It's about governance. How are you structured? The commission will not just register any entity that shows up. You need to show that you have appropriate governance structures. That's the only way we are going to assure the investors that their funds will be protected. Most of the pension funds, 100% of the pension funds, they're actually not allowed by the investment guidelines to put funds in certain structures. And I think this is where we miss it as a country. Without working on governance, we're not going to do it. I think Mulungu has already talked about a REIT. We have a REIT. Real Estate Zambia is now the first REIT in Zambia. And it's trading on Kawaso's exchange in dollars. They will be able to distribute at least 70% of their profit on an annual basis. And I'm told they've already done it, right? The first year they did. So this is the transparency that brings you money. Believe you me, in the first bond issuance by CEC, there were only 2 participants. The second 96, there were about 10 or 12. And we got a parliamentary visit. Like, why didn't Zambians invest in the first bond? It's all about awareness. And people were not sure of what it is they were getting into. But 10, and I'm sure, not I'm told, I'm sure, if they were to raise more money, maybe most of us would be running to invest in that. They paid a coupon, I think 2-3 weeks ago, $2.4 million. I'm sure those of you invested in it must have it in your bank. And that's what we need to do. So to register a REIT or any innovative product, you come to the commission, or sometimes you can just go to the website, first get background information. But we are a public institution, a government agency. You can seek for an appointment. We are always meeting everybody who gets to want to see us. So it starts from there. But there are a number of brokers and advisors licensed by the commission that you can approach. It makes life easier because they already have background information. These are on the SEC website. Find them, let's do this. The energy sector is a country challenge, but it also provides a lot of opportunities, like you said. Let's go to the market, raise long-term funds, and develop our nation. I think it also speaks into the theme of what you're talking about. Investing in the long term ensures that we transfer savings of today to our kids who are being born and the next generation, as it were.
Thank you. Mr. Kabaso?
Yeah, I think let me add on the aspect of, the complexity around governance. From the reviews that we have done, even from the customers, issuers that have come to us to seek for understanding the process, we have had this myth about I'll lose control of my business, which in principle, yes, does happen because you're diluting your control. So if you've got 100%, you saw 25% of a free float, you might as well be diluting to 75%. Then depending on how much capital you're raising, it may dilute further to even say 30 or 10%. The example of Elon Musk, he's now a minority shareholder in his own business. But I think that's a myth that we need to be able to pack at the back of our minds. Because remember, you're coming into the market and the market thrives on trust. The only way they can trust you is obviously if you can trust them on the other side. That's basically the rule of the market. Now, if you have to look at some of the products that we are looking at, the SMEs, even the REITs, we have got very, wonderful platform on which we can then be able to mobilize this funding. But if we do not improve the corporate governance, it becomes very difficult for us to be able to let the investor, have the comfort in our market and bring that capital. So at the end of the day, the emphasis on corporate governance is not because we want you to lose your control. We literally just want you to also get the trust from the investors that are going to bring capital into the market. But we have also had very wonderful and interesting situations with most of the issuers, where some of the shareholders have literally knocked on the company, on the CEO's door, and asked for coffee or tea and said, look, I'm the owner of the business, so give me some coffee because I own some shares. But that's not the way that we need to be able to let them interact. And I think it gets back to the point of awareness. So I think we still need to do a lot of work on our end to be able to sensitize even the shareholders. Where do you interact with your business? Is it during the annual general meeting? They have got regular disclosures that are coming through the SENS. Read those reports. Go through your broker, have more detailed discussions around what's happening in our business, what are some of the risks I should be looking out for. Those are your touch points. And then when you come to AGM, that's where you have got a full detail from this board that you have entrusted and your management team. They'll be reporting to you. Where you're not happy, feel free to be able to raise your hand. If again you're not very happy, feel free to raise that alarm with your regulator and say, look, I'm not happy with this particular player in the market. So on the part of the REIT, if I get back to your earlier question, I'll wait obviously for the signal to come through from our main regulator, the ACC, because they're the ones who award the REIT status. So once that REIT status has been given to the individual issuer prospective, they'll then come to us as an exchange and then give the intention to want now to trade publicly, that particular, REIT to the general public. At that point, then we start now looking through the requisite of what do you have? Are your papers in order and everything else that we'll be looking at, and obviously getting your board resolution that you want to be listed and trade your REIT as an IPO at the point when you're going to go to the public for the first time. So that is basically where the condition will be. So we'll wait for the REIT status to be awarded because of the implication of what the REIT does. And then on our end, for you to be able to raise capital on the initial public offer, we'll then have to make sure that we follow through the rest of the procedures, which are basically the normal, corporate, requirements of your reports, your financials, your board resolutions, and everything else in those lines. And just to ensure that your board is obviously, equal to the task that will be able to oversee that listing once it gets onto the market.
Nice, thank you. So that was a good round of questions that we had with our discussion. So within the frame of the discussion we just had, I'd like to ask the audience if you have 1 or 2 questions. Again, please, within the frame of the discussion we just had, please, you can go ahead. So we have a couple of hands, maybe just a little higher, so then we can point them out. Okay, we'll give 3 questions. We'll have the gentleman over here in gray, and then with the lady in red. Okay, let's make it 4. We'll have from the gentleman in gray, the lady in red, the gentleman next to the lady in red, and the lady behind next to the pillar.
Okay, thank you very much. My name is Katelema Mapoma. I'm a business and research consultant. I'll start my question with a statement I had some time back. I had something like, in America, if you walk in a room, the most important person is the taxman, and the second most important person is the innovator. In a country, developing countries like Africa, the most important person is the taxman, the second most important person is the regulator. So with that said, we hear that there's a lot of regulation that stifles innovation in Africa. So my question to SEC is, what is SEC doing to ensure that regulation does not stifle innovation in the capital markets? And with that said, my second question goes to everyone on the panel. Do you work with private players in coming up with these innovative products that you're talking about in the capital markets? Thank you.
Do we wait or?
Okay, I think we can. Are you able to hold? Can we get all the questions, or you'd like to address it now?
Let her ask.
Okay, please.
For the I may forget the question.
To our distinguished panelists and our moderator, and to everyone, good morning. Oh, good afternoon, and thank you. So I am Rosemary Banda, representing Lasso Digital Health, a youth-based innovation company that focuses on AI model system building for preventive care of non-communicable diseases. So with everything that has been presented, I would like to ask if it's possible to create an innovation youth bond, or perhaps a public-private blended fund that capital markets could channel for SDG-aligned innovations, especially in health and education.
So maybe a third one is its hand has been up.
Good afternoon. My name is Dr. Joseph Silisho. I think my question will cut across. I've heard a number of innovations of how funds can be accessed through financial markets. But I was also wondering, in terms of the SMEs, what's the role of credit rating agencies? Do we have any, and what's the impact in terms of SMEs accessing these funds? And what has been the challenge in that extent? Because I've seen governments promoting SMEs, but in the financial capital markets, how is the situation? Do we have enough regulations to ensure that some of the SMEs are identified and are able to access these funds because they are rated highly? Or do we have such a system in our country? Thank you. Submit.
I'm sure my panel colleagues will jump in. What seems to cut across the 3 questions is innovation. the gentleman lightly said regulatory processes could probably stifle innovation, right? And because of that, including your medical situation, because of that, the three regulatory offices, ourselves, the central bank, and I think the PIA, have come up with what we call a sandbox. A sandbox is basically where we get to play with the rules, like the sandbox at a nursery school, because some of the innovations may not perfectly sit within the laws. But the larger thing to think about is, can you imagine if the country allowed anybody and everybody to go to the public and get their savings? There will be chaos, right? Immediately you get money from 1,000 people to put in a business, and that business, God forbid, goes down, then the government has 1,000 problems. So because of that, that's why regulatory offices do exist. I doubt whether in the US there are no rules. In fact, if you get to read the Securities Act, it's just a copy and paste of the 1833 Act. So it's sometimes we tend to think our laws are retrogressive, but far from it. Most of us have been trained by the US Sec. We go to the US Sec actually to get to learn what they do. But because Africa, and more specific, Zambia has unique challenges. One of them is the absence of a developed venture capital fund, which should be able to take up the risks, because the public is not ready to lose money, but venture capital funds are. In fact, I think statistically, most of the venture capitals, it's like 1 out of 10 or 1 out of 7. They lose 9 and 1 makes them rich. So which means 9 ideas lose you money, but 1 idea gets to make you a lot of money, which covers the other losses. These are not public funds. These are private enterprise people who better understands the risk and puts money into your business. We opened the first cohort in the sandbox, and we had 4 businesses in there. They are at various stages of exiting the sandbox. We've learned quite a number of lessons, and one of the biggest is what has been discussed around here. It's governance, basically. Governance and governance and governance. So I'll challenge you, approach, especially the gentleman standing, Mubanga, is in charge of the sandbox at our institution. You could have a more focused interaction, and they can see whether your innovations fit into what the rules are all about. We exist to protect the public. That's our #1 assignment, because I doubt whether politicians will be happy with us if 1 million people are out on the streets. They have lost their 1,000 kwachas, and the SEC or Bank of Zambia or the PIA never did anything. We exist for the public good. We do not exist to stop innovative products coming to the market. I think I've probably addressed the medical and the taxman versus innovation. Coming to credit rating agencies, yes, we have credit rating agencies, but the law does not oblige issuances to be rated. What we are hoping is the people with funds would be like, if you do not come in a white shirt, I won't give you the money. So basically, these are the people to say, my funds are only deployed to rated assets. That's the way we want to approach it, because again, we are going to be accused of coming up with too many rules. So we want the market to determine whether you show up in uniform or you show up naked. Let them do it. We won't put it in the law as at now. But they are credit rating agencies, there are two of them. My colleagues can add on to what I've missed.
Thank you very much. And just to add on, and I'll start from the side of the, you said the Lasso Health. So part of what sits on the Capital Markets Master Plan is to try and look at social bonds. It was something that was put as the question. So there were many things that have been put on, but I think we have to give you an honest picture of how capital markets operate. Capital markets, capital flows from the least risky to the most risky. That's the way it works. So what you've seen, even in the history, like I talked about, I said the financial sector in terms of the market cap has grown from 40 billion to 500 billion. A lot of that, as I said, was first the bond market, which is considered the least risky. So you'll find a lot of money first flows to bond markets until interest rates get suppressed. Then it flows to the big stock market companies. That's why you've seen, even as the stock market has expanded, the top 5 companies have really absorbed a lot of that capital, be it CEC, ZCCM, Zambia Sugar, Zanaco, and Airtel as well. They've really absorbed a lot of that capital because they're considered the safest amongst the stocks. They're dividend-paying mega cap stocks. Then when it flows from there, it starts going into the smaller cap, and then once it's it's really saturated through the stock market, it then starts to flow into venture capital. So there's a tiered effect. So I know that for our country, this is an urgent issue to sort out funding for innovation. But public funding and securitized products for those things have to go in that order. Because you've got a pension fund manager who has 40,000 people here who, if they do not get their pension at the end, she has questions to answer, and she's in serious trouble. And some of you here, even, you may not even know it, maybe you don't even check your work statement. You find this is the person managing your own pension, and you might be telling her, take more risk with it until she loses it. So the first step we have to do as a country is keep our interest rates controlled. That's what a well-functioning bond market has done. And we can see we're getting to a place where we're getting towards neutral interest rates, stock market values are going up, and that's sending a signal to the markets to then say, and all that capital will keep coming in. The funny thing about when your valuations go up in your stock market is it attracts more capital. Now, when all this capital comes in and it's got nowhere to go, guess what we have to start doing? We have to start creating new products. That's when such bonds will start coming. For venture capital, as you mentioned, for the development of for SME financing, we need to separate, because I think we have to be very, very careful with what we're promising SMEs. There's a difference between a startup and an SME. An SME is a small business that's going to stay small for a long time. What it needs is a lot of lending capital, well priced. That's what an SME needs. So you can't come to the stock exchange with a barber shop and say, I want to list my barber shop. That's not going to happen, because that's a small business that's going to stay small. And the economy is built on that. That's why we need to keep the financing sector strong in terms of that. Startups, people who've got potential innovation, stuff like what she's talking about, AI infrastructure for predicting disease. Those are scalable ideas that start small and grow. Because here's the truth about capital. Capital wants to go into your business, not just to give you money because you have a nice face and we like you. It's because we want to grow our capital. She said it. I must deliver a return. So the first thing you have to do is, can you deliver a sustainable return? Is how much capital can stay in your business. So we need to first create, what we really need in this country is a Startups Act, or some sort of startups definition that then defines startups, so that even as the market, we can start to now hive those off and try and see if we can now support venture capital going into that. There are rules that we can try and help around with venture capital going into this. Some countries, just an example, not Zambia yet, but some countries have said a tiny percentage of pension money can go into venture capital. That's an example. But she also has to be very careful of that as well. But venture capital is then which then says which companies can we now directly go after and say that's what we can invest in. I think that's what we need to first settle on. One, social bonds can come when we've really secured most of the funds under the secure products. And two, we need to separate SMEs from startups, because those are the ones who get a lot of the public funds.
And just to add on, what you're talking about in terms of the Innovation Youth Bond, it would also fall under your sustainability bonds. And that's something, I think just a few days ago, SEC was having a workshop about green bonds. And these are some of the nuances of particularly under sustainability. But in terms of where we are as a country, we are still at the beginning phases of that, to be honest. And this is when the push is kind of coming in. So you'll find that in terms of bonds that are purely social in nature or have those benefits, most times the people who are driving or are able to finance those are usually DFIs. The pension funds are still, I think we're still in the process of selling the idea to our pensioners as well. I will speak for Prudentials ourselves. One of the key things that we've set ourselves up for is to improve the knowledge that our trustees have about responsible investments, because we realize that it's not just about having a return just in 1 year, but you have to think about, okay, what is the impact of this return and how sustainable is it if I'm making investments that are detrimental to the environment? How sustainable will it in the end make my return? So we have to think about things like water, we have to think about things like infrastructure and so on, but we're very, very early stage in that process.
Maybe just some ways of just giving comfort. I mean, it may sound so harsh to you, especially if you're looking for money. I mean, look, when you heard about capital markets, you came here with a lot of hopes that possibly might even come out a blank check. I think that the comfort that you need to be able to get is that the conversations here are coming from lessons learned. But what is obviously, comforting to be able to deliver to you is that most of the initiatives that are in the market, true to what the team has already said, they are also very deliberate and intentional awareness as well as capacity building, facilities that are being organized now to help both the startups as well as the SMEs to be able to grow. I think the most important thing is, yes, it could be an SME who's small, but there is potential for us to be able to scale up that SME. And what we are now seeing in the market is a lot of aggression from various partners. I think Bongo Hive is one of the few entities that are really doing much to be able to help out both the startups as well as the SMEs. I think we've also seen a few programs from Standard Chartered talking about the women in entrepreneurship. I think there's a lot of capacity building. If you're an SME in the room, I think this is a time for you to latch onto some of these opportunities. As an exchange, we're also incubating an idea where we're going to be supporting, small, medium enterprises, be like an incubator, where we then support you both to provide corporate governance and also train you in terms of how you can be successfully bankable. And these are ideas that we're now talking to our various partners about, because we realize we've also got a part to play. We're not going to wait for you to be cleaned up, because we also have to play our part to help you to be cleaned up, because we see what exactly you're failing on. So again, these are issues that we are taking up very closely. I think it's a challenge you've been given even by the SMEs. How can you help us to be bankable? So I think the comfort until that is rolled out, you can reach out to some of these partners on the ground, tell them you want to be able to get to be bankable and how they can support you. And I think as soon as we get our acts together, even as an exchange with our various partners together, we'll be launching what we're calling the SME Club. The essence there is let's incubate these businesses and let them be bankable and ready for the market.
Our last question.
Good afternoon, colleagues. Mine is really, let me introduce myself. My name is Christabel Ngongola Reinke, the Vice President for Trade and Commerce for Zambia Chamber of Commerce and Industry. I'm very delighted to be part of this session. The information shared here today has been very resourceful. And so when we talk about wealth creation, I think as a people we have a responsibility to ensure that the wealth trickles down to the last Zambian, because when we look at statistics now, we are looking at more than 60% of Zambians living below the poverty line. That's not a very good indication when we speak of very big figures that the stock market, for example, is privy to. And so my contribution this afternoon is, how do we make it work when we've moved from 43,000 investors to 1 million investors? What is the bigger picture and how do we get there? So in my submission, I was looking at the solution side of it, that as much as we are sitting here and sharing useful, compacted information, it needs to be cut across to everyone that is doing some kind of business, or whose business, in fact, has potential for scalability. So for the Zambia Chamber of Commerce and Industry, for example, where I come from, we know we have over 38 chambers cut across the country. That is already a potential platform to share some of this information, because we are in Lusaka today, but there's a business that is to thrive in Mongo, for example. How do we reach out to that one and scale them and give them potential to even employ more Zambians, as it were? And so I think we need to be looking at it beyond just where we are sitting in our comfort zones and run like our lives depended on it, because if poverty keeps thriving, then all these business talks that we are having today will really not have any effect on us. When everybody is winning, and when we win together, we thrive together. That is a better economy to have than one where you have one section of people thriving over the others. So I thought I'd make that as a submission. My other submission is just, I'm curious, on the regulator's part, there's an aspect of what you do and what you do really well. But when you speak to the population of a median age of 17 years, for example, they're so exposed to so much technology and digitization, and now we have cryptocurrency. So how does cryptocurrency come into the picture? Is it too futuristic to talk about now, or how do we talk about it when we're saying we're trading? I know at the moment there's no regulation per se, but how do we protect the interest of people that we want to grow, and how do we, work together in line with our local regulators to see how that can work? It's really more a question coming out of curiosity, I guess. The other questions have been ably answered, because I had a few, like our young lady here, the youths representing a different sector altogether. And I wondered if, with all the reserves of the profits that are coming from the exchange, a fund could be created. But I think you answered it very well, Nicholas, that there is something coming up for SMEs, because capacity building is very key. Many of us dream big, but when the business actually starts, then you realize there's so much you haven't done. And the mindset, really, when you are the dreamer of the business and you see it succeed for the next 3, 4, 5 years, it's a privilege to be part of that idea. And then when somebody comes and says, no, offset your 90% shares, it comes with a lot of sentiments. And so that can only change if we see living examples, local examples to say, look, that person started a business, but over the course of time, they've liquidated their shares and they've spread out, and that's how much they've grown. It will give us more confidence to jump onto the bandwagon, as it were. Those were my submissions. Thank you very much.
Could I summarize from a regulatory perspective some of the stuff that she's in like 1 minute? How many minutes do we have? Yeah, it's a very, very topical area, and she said it all. And the biggest challenge that we have, but also an opportunity, is the fact that majority of the businesses that we talk about are SMEs. And then if you were to look at the costs that are involved in raising capital from capital markets, it's huge. A number of workshops that we have had, most of the SMEs are looking for less than $1 million, which is very, very small for capital markets because of the costs that are involved. So what we have been discussing with the partners is, can we have more or less like aggregators, well-managed funds that could raise money from the capital markets, and then they on lend to small businesses, such as what our colleague was talking about. I think that's a reality on the ground. Capital markets are for huge capital raises. I think it's not efficient. We have to innovate as a nation, as a region, to fund SMEs, because that's a reality on the ground. The challenge of going to the 38 groups, we can do it again. We did it 10 years ago, but I think 10 years is a long period of time. I think things must have changed. I remember one particular one, so want me not to talk about negatives. We had to donate food in Mazabuka because no one showed up. So we have to think through it and see how different we can do it. We went to all the provincial centers. I hope the sentiment of what you're talking about has now changed. One particular lady in Ndola said, Philip, we've been running a family farm since the 70s. You want me to give up control? I think it's a big conversation that we should be having. Our friends in the US, they're looking to list. That's like your ultimate goal. How do I make money to get out of this? I leave 10%. I never understood where the value of Facebook was, but the little boy had all it figured out. He's now a billionaire. He's sold out. He's less than 20%. But here we want to keep 100% of a very, very small cake, because we don't want a Philip Stalu, who wasn't part of the original idea, to also get to drive a Mercedes-Benz out of your idea. But we are forgetting that we are selling, and we sell at a price that we agree to. It's not like you're giving it out for free. It's only in Africa and Zambia where we strongly believe that selling is a loss, including selling our houses. Sometimes it's more profitable to sell our houses than to continue owning them. But because the last uncle who did that became poor, we stick to have one small house, and then that's all we have. And most of us have all our savings in one big house. If you are like me, when the kids are growing up, then you start thinking, did we really need a 4-bedroom house? Because half the time it's actually empty. So you've got a lot of capital in some of these businesses, and we are not extracting it or using it to expand. Unfortunately, most of the examples good examples, local examples that we have, I would be accused of being a racist if I were to bring them out here. There are a lot of good examples, but very, very few, if any, examples out of the most of us. Maybe I leave, because this is a public forum, I leave it at that. The rest, in Bemba, we say, Mulundep.
So I think just to add to that, I think it's very important, and this is why we talk about capacity building and also awareness. It's very important for the business community to understand the journey of capital. Because I think whenever you hear capital markets, you're thinking, I can finally go and get the funding I need. There's a journey of capital that you can, if you go to almost any listed company, unless it was a government institution that went private, okay, through the capital markets. If it's a private idea, it starts with, I borrowed some money from my family members to start my business and used some of my own savings. Whatever the idea was, there's always like a micro version of just building version 1 of the business. Then I managed to get it onto the market and it grew a little bit. Then I did a second round of funding. And I went to a few more family members. Then by the third round of funding, you start going to institutions. Then by the fourth rounds of funding, you're going for institutional credit. So you'll find that almost any company, from a newly listed company to somebody as big as Walmart, go and pick up his book. Go and actually pick up the owner of Walmart's book, Sam Walton's Made in America. He even talks about it. He started with loans from his father-in-law and his own savings. Then he got loans from banks to open each branch. And then he got equity to cash out the loans and then go into public listing. So there's a journey, unfortunately, you have to push people through. And I think this is where a lot of people who have ideas need to brace themselves for that journey. Because when you start getting to this investor, she and her team want to know, have other people invested in you and have they gotten their money back before I start risking my client's money in you? Because I'm taking a chance on you. So have other people invested in you and gotten their money back at a smaller level? That's why biblically we say, he who is faithful with little shall be faithful with plenty. Similarly, in that same journey, you have to do that. So we can't get away from that. And as much as you want to help, there are initiatives where people can raise bonds together and redistribute them to as smaller loans to SMEs. But that's effectively the capital markets coming together to fund a bank effectively, and then say this bank is going to on-lend in a much better way. That's a different story. But that's one. Then the second question I think that was talked about wealth creation. I wanted to go through about that is one of the things the capital markets, and Nicholas talked about this, increasing active participation. You know, one of the things I can say with pride in our markets, for example, on the bond market, we've gone from 2,000 people in Zambia, individuals, I'm really talking about the individual markets. We've gone from 2,000 individuals who had bonds back in 2020. We're now heading towards 30,000. These are huge numbers. You know, we've grown as a country of people participating. The average person has bought 500,000 kwacha in government bonds. And this is just people who've been saving and investing. Now, think about that. The Zambian individuals, not even in structured pension, not anywhere else, have accumulated 10 billion kwacha of capital in less than 5 years. It shows you that that's how it moves. But what we first have to do is get more people participating in the wealth markets. Because once you get more people deciding, because whenever you ask anybody here, what is your retirement? And they'll tell you, flats. That's it. That's our view as Zambians. If I'm retiring, flats. The rest of the world, they've got flats, they've got stocks, they've got mutual funds, they've got all sorts of things. So we need to diversify people's idea of retirement, because what that does is retirement capital, people putting away their savings for retirement in assets, not just in structured pension, even at a personal level, I'm just saving directly, is what builds capital markets. We'll say America has $100 trillion capital market. Do you know where that money comes from? It comes from millions of people with 401k plans with their employer. That's workplace pensions. But it also comes from millions of people who've got what's called individual retirement plans. There's 16 and heading towards $20 trillion in America of individual retirement plans. What are we doing for the 1 million people in this country who are working every day and are thinking, I'm going to own flats, but what if they could own bonds? What if they could own stocks? What if they do that? And what that does is more people participating creates more of a wealth base. More of a wealth base creates more capital. And what happens also, what is making life tough for the smaller businesses, I think for the same group, is that what's making life tough for the small businesses is that the big businesses, instead of getting their money from the capital markets, are getting their money from the banks. So you as a tiny business are competing with a giant business at a bank for the same money. When what we need to do is get as much of banking capital to support as much of the small businesses as possible by telling most of the larger entities, get out of the lending space and go and get long-term capital from the markets. If we can get as much of it doesn't mean that big companies can't lend, can't borrow. But what we're saying is let them also say, get some of your money from equity so that you're freeing up some of the bank's deposits to go to the smaller businesses. You'll start to see a lot of the complaints of small businesses start coming down when we start moving, because there's a loan concentration problem in the banking sector. There's a serious loan concentration problem. So those are the things we're trying to fix. We will realize that if we here can successfully move out a lot of the big ventures and say, raise a corporate bond, create a solar REIT, create a REIT for your property, list your company. If we can start doing that, you'll start to find that banks will now start aggressively going to SMEs saying, do you need a loan? Do you need a loan? Let me give you some better some better terms. And you'll start to see that at work. So it's a trickle-down effect. It's not the capital markets have to come and intervene, but their intervention will affect your dealings at a bank. Hopefully that clears up some things.
Okay, thank you. We've had a wonderful discussion today. I hope it's been insightful and impactful. Should we need any more clarification or any better understanding, our able panel is very much available. Their doors are wide open. You could make yourselves an appointment to get a little more insight into how you can scale up your business and how you can explore more joint partnerships to ensure that we have continuous growth that trickles down to the last person in the economy. My panelists, I very much appreciate your participation today and I commend you for a job well done. I was your moderator today, Osego Chitambo, first of my name. I appreciate being here with you today. Thank you very much.